Hi, good afternoon. So today there will be no chat. It's just going to be me in front of the camera teaching you guys the types of analysis here. Now, it's not everything that is chat. Sometimes calm down and learn after the chat because you have to learn that what you do on the chat is simply a execution of what you already know. You get relax. This is beginner class. I'm warming you guys up for what is to come. Very soon, and I go see charts and tire. Like you guys will see price action and tire. So there are three main types of um analysis or analyzing. There is fundamental analysis, there is technical analysis, and then there is discretional analysis. Let me explain from the back to the front. Now, discretionary analysis, these are traders that trade based on their emotions, some based on their feelings. Like you get some people now, they go just enter the charts, their spirit will just tell them buy. Then they will buy. It's called discretion analysis. Now, let me bust your head. Some people use that thing and make money. It works for them. So I don't come and be like, they don't know what they're doing. That's discretion analysis. Then the second form of analysis is fundamental analysis. Fundamental analysis now, this is people that trade based on news events like GDP rate, unemployment news, CPI, PPI, the news joke like FOMC when Powell is speaking. Although Powell has gone out of power, it's one new guy like that nobody even knows who the guy is. He cannot even move the market. Then the third type of analysis is technical analysis. Now, technical analysis is simply trading based on pattern. You notice a particular pattern recurring in the market, so you just trust that pattern to occur again. We live in a world where history repeats itself, not just on the charts, even in real life. There are some people, maybe when you were in secondary school, there's that guy in secondary school that you know will always take first. Then there was that guy in secondary school that you always knew would take last. Then there's that guy in secondary school that was always best in maths. Then there was that guy in secondary school that was always best in physics. That is pattern repeating itself. So now imagine now that you knew that this guy used to always come best in maths. Now you know that if you bet on this guy to come best in maths 10 times, there's a very high likelihood that that pattern will repeat itself at least 6 to 7 times. So if you bet on that guy to win best in maths 10 times, there's a very high probability that you win 6 or 7 times. That is simply technical analysis. That is the whole summary. So that's the three types of trading. Discretion analysis, these people that trade based on their instincts, their goals, or their emotions. Fundamental analysis, these are people that trade based on news. For example, now as politics now is coming, election is coming in Nigeria very soon. So we know that during election, government used to whine now. They used to usually do some things to wind the people and use poverty as a way to force people to vote for them or manipulate. So there's a very high chance the naira value is going to fall against dollar. Now, if you have big money now, start buying dollar because naira is going to lose value very soon when the election kicks off. Then technical analysis is pattern repeating itself. If you notice something happen once, twice, or thrice in the market, there's a very high probability that history will repeat itself. That is simply technical analysis. Thank you.